What's up, guys? Doing a end of day update and a week update. Um, I really like the moves we had today. It's kind of what we were setting up for yesterday. We've been playing this month and last month and really since the summer. Long vol, expecting growth to slow, expecting high beta, tech, FANG, everything that's worked for the last 2 years and these last 9 consecutive quarters of growth to finally go from great to good. And so what we've been setting up for yesterday, got to book some gains today. I was talking to some of you in the room yesterday. It's tough, if this is your first bear market, and let me just say, I guess technically longer term we're not in a bear market yet. But if we're talking about relative to the intermediate term, we're definitely in a bear market the last month. So long term, we're still making higher lows. I'm very kind of skeptical that these lows are going to hold. That said, if this is your kind of first go round of trading a kind of risk off type of move where growth slows and the volatility really picks up, you're going to have these bounces when you have these hard sell-offs. They're going to come ripping back on you, and you're going to get some pretty good squeezes. So yesterday we felt that. I think some of you maybe were a little bit long, a little bit over your skis short. And it's tough. There's a timing component to that, and how you work your size relative to your portfolio, how you work your longs versus your shorts. There's a balance there. And I think a lot of you did a very good job of staying with it and not panicking. And then today we got rewarded. So I talked yesterday, you got to kind of bend your knees sometimes before you leap. So you got to get comfortable with trading in negative territory or being down in a position, right? You can make a bunch of sports references. You hand the ball off to the running back, he actually steps back before he takes off. Basketball, you bend your knees before you leap. It's the same thing in trading. Most traders, they want to put a position on and they're scared to death of it going against them. But the really good trader actually wants the position to go against them, because you can get, whether you're shorting or going long. If I'm going long, I want lower prices. If I'm shorting, I don't want to, I can't just plunge in at one price on my full size. That's not the way to do it to consistently. What you need to do is build in to a larger position as you get higher prices if we're shorting, right? And there's a balance there. We're not talking about averaging in for forever and blowing yourself up, but I'm talking about taking the right location with the right cycle and then letting the market come to you. So that's easier said than done, but we did a pretty good job. If I step back and look at S&Ps, we were low within the cycle here. I was traveling, but we were talking about we can definitely bounce off of this area. And then we had an 8-9 count, so 8.6 on the frequency. That's one of the cycle frequencies we follow. And we basically had an 8-day rally and into the bands. We talked about getting a lower high right in front of 2820 and or kind of a double top. And then the cycle looks to be crossing over here to finish the week. So nice sales yesterday. We were short futures. You can see I covered a couple times. I covered a little bit this morning just in case we made one more high. I was going to short more. I just wanted to give myself a little bit more room. And then covered and actually got some spider puts. Took those off basically into the low here right in front of pi. I think I marked that actually on the SPY chart. Yeah, so pretty much perfectly timed there, and then we bounced. I actually shorted more futures, just one more contract into the close on after the bounce here. And so what I want to see from here is us get back through pi and move back into what we call the southern hemisphere. That would be very bearish for the near term, and that'll kind of start to roll the 4-hour back over. So when we look at the intermediate term, when you fall from here back to the bands, you do expect a bounce, right? So this was a higher low, right? So we kind of expect a bounce, but the real test is going to be what happens if we take this low out and then we're back to making lower lows. And that's when you're going to see the vol really pick up and everything is going to accelerate on the downside. Now, the risk on the up remains this level, high, this high. This whole area is where the risk is. If we get above there, then we're going to have to play some defense. But I like today, I mean, just had a pretty good day. I'm happy with it overall. Some of you said you had your best day trading equities today, so I love hearing that. I'll just show you a couple other moves we made. I've been buying bonds and covering bonds here. This is the 10-year chart. So we covered, I bought 23.5s, resold, covered, reshorted this morning, and didn't really realize we got this high into the afternoon. I probably should sell some more 10s here. This is resistance. We're right back at pi. I might actually sell another contract as soon as I get off here on this video. Just the futures are still open. Yeah, they are. And anyway, so I'll just signal that right now while I got it. So I'm playing a short in 10s, but I'm long the same amount of bonds. And since 30s, the long bond is more duration, it moves more than 10s. I'm actually net long. And so we keep buying dips in 30s. I lightened up a little bit this morning into pi, and I'm just going to let this run. So I missed this dip. I missed a couple things today. We actually had a really good day, but we could have bought 30s again down here, and it came back really fast. It was like 9:30, I think. It dipped and came right back. 9:15. So that was kind of a miss. Should have added a little bit more in 30s. That's the game plan, is just keep buying dip and bonds. And then if we do get, I'm expecting GDP to be really crappy coming into the fourth quarter, just based on the comparable period in the comp. So if we get more risk off, 30s are going to trade well. Everybody seems to be short, chasing the Fed's tail, chasing Fed hikes. And I'm just telling you, if S&Ps make a lower low, you can guarantee the Fed's going to get dovish. I mean, they like to act like they pay attention to inflation and, the jobs data, but they're just going to gaze at the stock market at the end of the day. And if stocks start crashing, they're going to get dovish. So anyway, that's not why we're long bonds. It's just a part of it. I think if that unwinds, you could see a pretty big rally in the bond market. So anyway, we're buying dips and bonds. The VIX, UVXY has been really tough. That's probably been my biggest position that I've been giving money back this month, just because the implied vol has really crashed, and both my calls and my puts haven't really gone anywhere. Today was the first day that I was able to realize some gains was short 45 strikes puts. So as we rallied, I sold out of those or covered those. So you're short 45 puts and we rallied. Those are going to increase in value because they're becoming less valuable, and I'm short those puts, so that's increasing, putting me into a profitable position. So that's what I did here, pretty much right into the high. Probably I still have some 60 strike calls, and those actually perked up quite a bit today. If we get more follow through down in S&Ps next week, then I think I'm going to get a chance to come out of those 60 strike calls. So that would be nice. And on the downside, maybe I'll sell some puts if we start to make a lower low again towards 45.40. I'm not really in a hurry to sell. We'll depend on what these do. Bonds, a couple other names. Tesla. Man, we signaled we were short some puts here. I basically signaled to take profit on those right into the high of the move this morning. We tagged it perfectly. So we said sell signal. You either buy puts, cover short puts, sell calls. There's different ways to play the option side, but that was another great trade. We realized some profits there. And I'm trying to think what else. Apple. I covered some shorts on Apple this morning. It was pretty good towards the low. We had a small bounce. I sold some 210 calls against my long the other day when we were up around 2.9, 2.10. So I covered those back today. I think that was pretty much it. So pretty good day, and I'll just show you what we did. Man, losing my steam here. So, guys, we have a new trading room too. So, you can go look at a couple videos back, the crap that went on last week. But I'm not. I got rid of the guys that were working for me. So, I'm putting together a new site, a new trading service. I'm really excited about it. I'm just trying to structure it. I'm going to have real-time alerts for crypto, commodities and bonds, Forex. Oh, I didn't talk about Forex, but we did today. And then equities and options. And so I'm structuring all that pretty much right now. But you can see here at 2,500 on the options side today. You can see I was doing a lot in SPY, Tesla, some Apple. You see this is my Apple short I was covering, $200 there. Some UVXY if you were to scroll down. The futures side, did about $5,000 there. A lot of it was booking the shorts on these. And then we've traded around tens and bonds pretty good. It was an okay day in Forex also. I'm largely just Dragon here. So if you guys aren't familiar, Dragon is just the nickname for pound versus the yen. So our call was we were rallying up here. It's an 8-9 day rally. Again, there's that 8.6 frequency. The cycle was high. That started to cross. We had a swing line setup in our model. It's one of my execution setups I teach my traders. We took that low out, and then we started to break down today pretty good. I know there's a lot going on with sterling, the Brexit, yada, yada, yada. But we started making new lows. So I was feeding into a small core short and then added to it. And then added to it again here today on the 15-minute and 5-minute stuff. Pretty textbook in the model. We broke, added, and then covered in new lows. So I'm still core short Dragon. I think there's a little support here at the 8 and the 200, but I'm thinking more of a retrace back towards the 46, which would be about 50% of the move. So we'll see if this daily cycle can play out. That's pretty much it, guys. It was a good finish to the week. Good finish to the week, and I'm proud of a lot of you. You're kind of new to equities and options. You've been doing great there, doing a lot of work with implied volatility, so keep it up. And Forex was choppy to start the month, but this week, kind of turned it around here. So I'm kind of looking forward to continuing that momentum into next week. But I hope you guys have a great weekend. I'll be busy working, trying to get some of this new platform up on our trading services, and I'll keep you guys up to speed on that in the chat room. So if you are new or you're trying to find me, since we closed the other chat, I'll put just the easiest thing to do, guys, is follow me, my Twitter handle at @TheJasonJenkins. Message me, and I'll send you what email you want me to send you the link and the invitation to the room. And we'll get you in that way. That's kind of the quickest way right now. I sent out the mass email list that I finished up this week, which was a lot of work because I had to manually send out about 1,000 emails or invites. But that's the best way to get in touch with me right now, and then we'll start to streamline everything next week. Enjoy the weekend.